All right, so the Fed finally did it. They finally cut interest rates for the first time in 4 years, and they cut them by 0.5%. But what did they cut? They didn't cut mortgage rates. They cut the rate that banks borrow money at, the federal funds rate. Mortgage rates are actually slightly worse today on this news. And the reason for that is because the mortgage bond market had already accounted for the cut back in August, because Jerome Powell did an announcement back then saying, hey, it's time. We're cutting rates in September. So the market reacted to the news. They didn't wait for the actual event. Well, what's shifting things a little bit is they cut rates by 0.5% instead of 0.25%. I thought for sure it would be 0.25% because that's a safe bet to not stir up the pot. 0.5% could mean that the economy is actually worse than they thought it was. And that's why we're seeing a lot of volatility today. But don't worry about that. That happens all the time. Rates are still sitting at the best levels they've been at in the last 2 years. And if you have a home equity line of credit, you're going to see your home equity line of credit automatically come down by 0.5% in October or November, depending on the bank you're with, because your home